Good afternoon and welcome to the Underbelly podcast, where we probe beneath and underneath, behind the scenes at all the news stories of the week that the other outlets aren't covering very thoroughly. Let's just put it that way. I'm Brent, Clanton, along with our analyst, John Coumarianos, and we may have some others join us midway through the cast. It's very fluid. It's live, not radio, but it's a live stream broadcast, and anything can happen. So we appreciate you watching us this afternoon. John, good to have you in with me.
Thanks, Brent.
Some interesting stuff we were talking about before we started things off this afternoon. This whole Deutschebank Italian soap opera that's going on over there. What is going on, and which of these is really the toughest that these people are going to have to face? How will it affect us over here?
So it did affect European markets, and it has affected the bond market, especially in Italy and in Europe, early in the week. So Italy is the third most indebted country in the world. I think not a lot of people realize that. They have almost $3 trillion in debt. It's not a small amount. We might think of it as small. We have over 20 or approaching 20 trillion, but our economy is
320 million people to divide that amongst as well.
That's right.
Italy doesn't have near the population.
And their population is they suffer from the similar problems that the other European countries do in terms of lack of population growth.
Yeah.
So it's a bit of a problem, and so they've had a government now where two parties that are sort of anti-establishment, Eurosceptic parties have won elections. And what happened this week was that they have a president. Their system is a little bit different than ours. Their president, however, is largely a figurehead, except that this week the person, his name is Sergio Mattarella, really asserted himself, blocking the appointment of an economics minister.
Right.
And that offended both of these parties, who have fallen into line previously when things like this have happened, but this time apparently didn't. And so the leaders of these two parties now, in response, called for an election to take place in the fall, I think. And that immediately caused widespread fears that election would serve as a Euro referendum and possibly cause Italy to withdraw from the European Union. It would be a Brexit-like election.
Yeah.
And so that caused Italian bond yields to spike dramatically very early in the week. And so the two-year Italian bond not very long ago actually had a negative rate, and on Tuesday of this week had a 2.5% yield all of a sudden, very similar to ours actually. That's creating some problems. I'm reading an article by a fellow I like very much. Christopher Caldwell writes for the Weekly Standard occasionally, and he's a real expert on European politics and economics. And so he laid all of this out, and he concluded his piece, very short but very dense piece, packed with good information. He ended by saying that things are sort of settling down now in Italy. Things look like they're falling into place, and
whatever that means.
Whatever that means. I think it means that the two leading parties have extracted some concessions.
Yeah. It's really interesting to look at how these countries have evolved since the Second World War. Let's use that as a timestamp. And Germany has emerged as the strongest economy in the European Union.
Yes.
Gee, I wonder how that happened.
Right. We supported Germany very much. We did support, to be fair, we supported all of Europe. The Marshall Plan supported all of Europe, but maybe Germany in particular. They came out the strongest. And the complaints among the weaker players is that the whole European Union benefits Germany in some way, and so the weaker players have bristled at that, or starting to bristle more about it. In fact, the way Caldwell ends his piece is the problem is not that the parties in Italy and the rest of Europe have been getting more obstreperous, but that Europe is just getting harder to govern.
Yeah, well, it certainly is.
Yeah.
There was this idea that the Eurozone would be the United States of Europe.
Right.
Like the United States of America. There are so many reasons why that can't ever work.
Yeah.
Primarily because there are individual cultures and languages at play
Right.
in the Eurozone, whereas in the States here, we may have different cultures, but we're still one nation.
Yeah, if you live in California or in New York or somewhere where you pay tax and your taxes wind up going to Alabama or Mississippi, you don't view people who live in a different state as a foreign country.
Well, within reason.
Within reasons, and that's a fair point. There's some of that. The fact that some of that, there is some feeling sometimes that you'd want your taxes to stay more local here, and so you can only imagine when they really do go to another country what that must feel like.
Well, and there's been this big eye-opening event now where the new tax bill is not going to allow people to deduct their state income taxes. Yeah. Well, states like California and New York and New Jersey, there's several of them.
That's right.
Suddenly, these people are realizing, hey, wait a minute. Suddenly, I'm going to have to pay a whole lot more in taxes next time around.
That's right.
And the rest of us have known this for quite some time. We've basically been underwriting their tax breaks all along.
We have been. It gets complicated because on some policies we underwrite, one state will underwrite, State A will underwrite State B, and in other ways, State B will underwrite State A. So it gets quite complicated.
Well, one group's subsidy is another group's additional tax burden.
That's right.
Basically, it's just simple math.
Yes.
So in Europe now, how are there any similarities between what's happening in Italy and what has been happening in Greece? Is this an economic mindset that has to be overcome? Is it a political mindset that has to be overcome?
The situation, there's a lot of debt, so that's what those two countries probably have in common. I don't think Italy has the unemployment, the more severe unemployment problems that Greece has, and I don't think they have the just the kind of scamming that went on in Greece with people retiring at such an early age, and all. I don't think Italy has such severe problems, but there are similarities in terms of the levels of debt, and just I think in how the way the union works to the benefit of Germany more than to the other countries.
Interesting that Germany has been able to achieve what it has achieved, and for I guess 3/4 of its post-war existence, it was literally a country carved in half.
That's right. Yeah,
it was half. East Germany the wall didn't come down till what, 89?
Yeah, you and I are old enough to remember when there were two Germanys, and it's almost hard to believe now, so many years later. But yes, Germany was carved in half. East Germany was firmly part of the Eastern or Soviet bloc of countries, communist country. And then when the wall came down, the two Germanys integrated finally. So
I had an opportunity to visit behind the Iron Curtain in the mid-'70s.
Really? What was that
Well,
like?
It went to Budapest and went to Prague. So I was in high school.
Yeah.
Right? So we were on a chaperone trip. But still, it was very stark.
I'll bet.
The differences that you could see. I never will forget, we had a chance we were playing Frisbee in front of our hotel in Prague.
Yeah.
And a Jeep with Soviet soldiers drove up, and the guy with a bunch of scrambled eggs on his shoulders got out and went inside. And so these three Soviet soldiers were watching us play Frisbee. And they didn't speak English. We didn't speak Russian, but they wanted to know what we were doing. And so we taught them how to play Frisbee.
Well,
they had never seen a Frisbee before.
They'd never seen a Frisbee, wow.
So we're out there tossing Frisbees with Soviet soldiers on the front lawn, and the general comes back out. Well, they popped to attention, and he said something, and they got in the Jeep and ran off. I tossed a Frisbee to him as they drove off. The guy caught it, and he's waving it as they drive over the hill. We gave him our Frisbee.
You gave him your Frisbee, in effect,
So, some cross-culturalization going on there in 1973, I think it was.
Wow, little cultural exchange, right?
Yeah, but, I never will forget when we crossed the border, a soldier came on the bus that we were riding in with the machine gun.
Yeah.
And he bored a hole through all of us with his eyes.
Yeah.
Every one of us on that bus until he was satisfied, and then he got back off. It was an unnerving experience.
I'll bet it was. We as I said, it's easy to forget that half of Europe was under Soviet control.
Yeah, it really
for
is.
a long time. Yeah.
Hey, I want to ask you something else too about this Deutschebank thing. Now, how big a deal is it? I've heard commentaries that Deutschebank has the potential to be 4 times worse than Lehman Brothers was. Is that accurate?
I don't know that that's accurate. I'll tell you what I've been hearing. I think one of the best sources on this is probably Steve Eisman. If you want to compare Deutsche Bank to Lehman Brothers, Steve Eisman didn't short Lehman Brothers the way another hedge fund manager, David Einhorn, did. But Steve Eisman, of course, is famous for having done the big short. Having made that trade, having shorted subprime mortgage-backed bonds. And he is shorting Deutsche Bank. He thinks the bank has problems, and I wrote a few of them down. I think he thinks the bank just has too many people, their cost structure is bad, and people have to be laid off, and that's already started to happen, I think.
So they're top-heavy.
They're top-heavy. They have to shrink, and they apparently they're just not they need to greatly curtail their investment banking operations. So they're just too bloated there. They are the 3rd biggest bank in Europe, the largest German bank. So they could have their problems could spread. On the other hand, it doesn't look like the bank is going to go down because it's not so badly capitalized. Their profitability is very bad, but it seems like they don't have tremendous balance sheet problems the way Lehman Brothers did, just an overload of debt levered 30-1. That doesn't seem to be the situation here, despite the fact that he's confident in his short. I don't know that he thinks the bank is just going to collapse the way Lehman Brothers did.
Boy, we don't want that to happen.
We don't want that to happen again. Yeah. So, and I think the interviewers and the segments that I've seen him in have pressed him about whether European banks are sort of in that dire a situation. I don't think he thinks that's the case. He does have, interestingly, positive things to say about the American banking system now. He thinks the reforms that occurred after the crisis have basically worked. American banks are levered 10-1 now, not 33-1 or 30-1 the way Citigroup and other banks were levered. Now that may loosen up and leverage may go to 12-1 or 15-1 even as Dodd-Frank gets loosened up or dismantled. But again, that's not a systemic risk, I think.
Yeah, and what is the comfort zone for that kind of leverage? Is 10-1 the best ratio? Is it smaller?
I think 10 to 12 is sort of normal. 15 starts to get a lot, and 30 was just insane, as we now know. I can remember doing an interview when I was back at Morningstar saying, I forget which bank was it, Bear? I was talking about Bear or Lehman maybe, and it was 20. They were whatever bank I was talking about was 25-1 at that point, and it was just a bank can't function that way.
No, it's mind blowing.
It's mind blowing, yeah.
So the changes that the Fed announced, I believe, last week to require greater reserves for these banks, is that going to be a help as far as shoring up confidence in the banks, or is it going to be a hindrance to the banks in the amount of capital that they got to keep in store that they're not able to lend out into the community?
So both. Unfortunately,
it's like double mint gum.
Yeah. You'll be able to have confidence, and we can and should have confidence in banks now, according to Eisman, because of their constrained leverage ratios. But of course, that also does mean that they have constrained leverage ratios and can't do quite as much lending.
Yeah.
So it's a little bit of both.
All right. Well, we'll take that at face value. Yeah. I do want to move along and ask you what you're going to be working on for next week. You do a lot of writing for us at Real Investment Advice.
I do. So Lance and I, and actually Michael Leibowitz, who's a partner of ours, we're working on a series of articles that's talking about how difficult it can be to be a buy and hold investor, especially at a time when market valuations look elevated, which of course we speak about a lot, but we're trying to write a few systematic pieces talking about that. And we have sort of dialogues with people in a way where names aren't always mentioned, but a group in New York called Ritholtz Wealth Management, a fellow named Josh Brown writes for them, and they're smart guys. They've made the point that, look, if you're dollar cost averaging, if you're a sort of investor who invests part of their paycheck, part of every paycheck in the markets, sure, you'll some of your investments will occur at market peaks and they won't turn out to produce great returns over your lifetime, but some of those periodic investments will occur at market troughs, and those will achieve terrific returns. And so, on balance, you'll do okay.
That's why they call them averages.
Yeah, that's right. And I think that's a very fair argument. I think the issue is with us that, like any other financial advisory firm, Clarity has a lot of clients who are very close to retirement, already retired. At that point, you've made all the investments you will ever make in your life.
Yeah.
And so you've accumulated your wealth. There'll be no more opportunities to do dollar cost averaging and make future investments at low prices or at market troughs. And so if markets are elevated now, I think we feel the need to be very protective of people in that situation who've made all the investments they will ever make.
Do people, I think, they get jerked up short when they come to the realization that, hey, I'm not young anymore.
Yeah.
Hey, I don't have time to correct these mistakes.
Right.
Whether or not they're of my own making or just bad luck.
Yeah.
It's the coming to grips with mortality that people have the toughest time with.
I think a very difficult time. There's mortality, there's rearranging your assets, there's making your assets do something different now, not grow, but provide income to you. And dealing with physical decline and death. And of course, these are very difficult topics to deal with. On the plus side, it's nice to see clients sometimes who have children and children who've been successful, and they're happy to leave them money if they've got some excess cash to do. And so that can often take some of this thing away.
Yeah, we've told our kids we're spending their inheritance.
Okay, well, there's that possibility too.
That's the way it goes sometimes. That's just the way it goes. So you're a newcomer to Houston. You've been here for what, 6 months now?
4.5 months.
Yeah,
not quite 6.
All right, so today is June the 1st.
Yeah,
that is significant because along the Gulf Coast, this is the beginning of the hurricane season officially.
I heard that on the news last night.
Yeah.
Yes.
So there you have it. First day of hurricane season. I have some stats here for you. Of course, we've already had one named storm, Alberto, which blew through earlier this week or last weekend. Colorado State University is expecting 13 more named storms, 6 hurricanes, and 2 major hurricanes. All right?
Yep.
So that is a reduction from its forecast originally, and I'm led to believe that this is going to be a somewhat normal year for hurricane activity. Now, this is for the Atlantic area, the Caribbean, and the Gulf of Mexico. So it's a pretty vast area, and of course you've got the eastern seaboards versus the Gulf Coast storms. But that's what we're looking at. I hope they're right.
Yeah.
Just normal. We'll take normal.
We'll take normal, yeah. And how good are they? I guess it's probably too soon for them to be able to know which of those might go up the Atlantic coast and which might come into the Gulf.
There are so many variables for that. I mean, you've got steering currents in the oceans, you've got wind currents, and then you've got pressure systems coming across the continental U.S. that will determine whether those storms go up the East Coast or are sucked into the Gulf of Mexico, or and a lot of it depends upon where they form, whether they form in the Atlantic or whether they form in the Gulf, like Alberto did a week and a half ago. That thing formed off the coast of the Yucatan Peninsula as a low pressure system, and then developed quickly, thank goodness, into a subtropical depression. It never really developed into a hurricane, but boy, did it dump some rain.
Yeah, it did.
So
I also saw something on TV last night related to this, which is that there's been a just a ton of construction and new building and real estate development in Boston.
Really?
Yeah, in their Seaport district. And there are some fears now and some projections that some significant part of the Seaport district might be underwater in 20 or 30 years.
Because of lack of drainage capacity?
Lack of drainage. And I think the statistic they threw out was that the area, the water, that part of the Atlantic Ocean is called the Gulf of Maine. And can you believe that?
I've never heard that.
It was the first time I heard that, and I grew up in the Northeast.
Yeah.
The Gulf of Maine apparently is one of the most rapidly warming bodies of water in the world.
Really?
Yeah. That's what this documentary said.
Now, is that... I'm not going to get into the climate change debate.
No.
Okay. But... is that because of more silt going into that bay that makes the water shallower and thus easier to warm? Is that what's going on?
It's a good question. They didn't really go into any detail except just to really throw out that statistic.
Yeah.
So no explanation of why that might be.
By the way, one benefit of Alberto this week was in Galveston, the seas cleared. Now, you haven't been down to Galveston yet.
I have not.
Okay.
I have not.
So Galveston is typically chocolate brown, the water, because of the silt.
I see.
The runoff from the San Jacinto Trinity Rivers, the Mississippi River, the Gulf of Mexico has this current, this rotating current, kind of like a toilet bowl. And all that silt, comes downstream on that current.
Yeah.
And goes right past Galveston Island. So that's why the water is so murky. Well, Alberto pushed that current back in the other direction. And so we had some relatively clear water on Galveston Island this past week, which was beautiful. It really was.
Oh, nice.
I don't know if it's still there today.
Yeah.
If you're going down there this weekend, get there fast because it won't last for long. But when you go to Galveston, you'll understand what we're talking about.
Yeah, I'm anxious to do that. Yeah, make some other side trips. The hill, I hear so much from clients and other people about Texas Hill Country.
Oh yeah, that's a whole other adventure too.
Yeah.
So we'll be expecting travelogue reports from you on a regular basis.
That's right. I'll have to provide that with the financial reports.
Right. Now, one thing you won't be able to see is Astroworld, and I bring that up because today is the 50th anniversary of the opening of Astroworld, which was down on the South Loop 610. Across from the Astrodome. Yep. Of course, it's not there anymore. It's a big storage lot.
But they are keeping the Astrodome, I think, as we mentioned.
The Astrodome achieved national historic recognition this past week.
That's great.
It's been saved from the wrecking ball, and thank you. We'll take it. They're going to do some neat things with it too. They'll repurpose it for events. I understand the Offshore Technology Conference would love to have some of that space for their exhibits next time they come around.
Sure.
So, be probably a couple of years or so before we're able to use it for that, but at least it's been saved from the wrecking ball.
Yeah, that's great. I saw a game there 30 years ago.
Did you really?
I did.
Yeah.
I had a friend from high school who got married pretty quickly after college in Houston. I guess his wife's family, they met in Colorado, but a lot of her family was here, so they had the wedding here in Houston. And that was my only trip to Houston subsequent to moving, or previous to moving here. And the wedding was in August, by the way.
Oh my goodness!
I don't know why they did that.
People know better than that.
But one of the events, the days leading up to the wedding, was to go to a ball game at the Astrodome, and so we did, and that was a lot of fun.
Well, the ball game in the Astrodome was pretty comfortable.
Yeah, that's right. It was great.
So
first dome baseball stadium.
The first dome stadium built.
Yeah. Pretty incredible.
So it's going to be saved. Well, that's good. Well, look, we had a shortage of participants today. That happens sometimes. You know why? Because they're back there in the offices doing some business with some people, and that's the most important thing.
Sure.
So we'll catch up with Richard Rosso and Danny Ratliff and Jesse Colombo perhaps next week. Thank you for watching us this afternoon. You can catch us where podcasts are displayed. Livestream does it. Facebook does it. It'll be on YouTube as well. For complete details, go to our website, realinvestmentadvice.com. And thanks for watching us this afternoon. For John Coumarianos, I'm Brent Clanton. Have a good weekend.